Hello Ottawa, Irene Bilinski here with RE/MAX, and today I'd like to introduce to you Thomas Thorne. He's an insurance broker, and the reason that he's here is to discuss mortgage insurance and why you should use your insurance broker instead of using your lender. So Thomas, tell us why we should be using your services instead of the bank lender's insurance.
Well, certainly. One of the main things I like to start with is when many people purchase a home or a property, it can be their first home, their second, it could be an investment property, and more than likely it's going to be one of the largest investments they're ever going to make for most people. We're already used to insuring certain things that we have, like our cars or our phones or other items, but as I say, for many people this is one of the largest items, so it only makes sense for most people to make sure that that asset is protected from unforeseen events. And unforeseen events such as premature death, illness, or becoming disabled. If any one of these things happen, it can be financially crippling for most families. I'd also like to add as well that the best type of insurance for anyone to have is the one that's actually in force at claim time. So whether it's your own personal coverage or whether it's the one that you've got through your lending institution, as long as that's the one that's in force at claim time, that's the best one to have. But in knowing that, a lot of Canadians have just not been made aware of the differences between the type of insurance that's available through the lending institution, typically when you purchase the mortgage, versus you getting it on your own. And when people are aware of these biggest differences, it just allows you as a consumer to make a more informed decision about the type of coverage that's best for you, and at the end of the day, which institution you end up choosing to choose that product from.
That was great information, Thomas. Thank you so much. And could you tell me what would be the 5 top differences between using an insurance broker and a regular lender?
Absolutely, it makes a lot of sense. So I would say, number one, the first thing that consumers have to be aware of is that when you're dealing with your lending institution, typically the person on the other side of the desk talking about insurance isn't actually a fully provincially licensed insurance broker. Typically they're an employee of the bank, and they're able to sell creditor insurance, but there's a big difference between creditor insurance and insurance that is offered through an insurance broker or a licensed insurance broker like myself. So the second thing that consumers should be aware of is that typically when you purchase insurance through, again, through your lending institution, typically it's tied to the mortgage. So what that means is that further down the road, should your lending institution be a different financial institution and you want to change mortgage providers, the insurance is often tied to that loan. So when that happens, you'll have to restart the insurance process again.
Oh, really?
Which can be very problematic if, let's say, it's been a few years and your health isn't as good as it once was, or even more so in simplest cases, you'll be older, so you actually end up paying more for the insurance. So the fact that it's not portable, depending on which lending institution you're with, can be very problematic for most individuals, which they only find out, unfortunately, in most cases, too late. So the third one would be often, again, the credit insurance that you would typically purchase through your lending institution is often a decreasing benefit amount. So meaning as your mortgage goes down, the mortgage amount that you have to pay off goes down, so does your coverage. But the problematic thing there is that your cost for the insurance actually remains the same, and in some cases, even though the benefit is decreasing, the cost in some case can rise if the insurance company that's underwriting through the lending insurance company decides to increase their rates, because the rates aren't locked in necessarily for the length of the mortgage. But no, it's a big problem that, again, most people aren't aware that the benefit that they're paying for is decreasing year after year after year as you pay down the mortgage. Okay. So the fourth one being that when you get to name a beneficiary and your insurance is, again, with the lending institution, the beneficiaries by default, and you can't change this, is the lending institution itself. And in some cases, let's say when a claim is paid, you might want that money or those proceeds to go to other family members or to other debts that are maybe more expensive or have more of a priority than actually paying off the mortgage. So having more flexibility at claim time is something that's also a big difference between dealing with a creditor, dealing with a creditor insurance, or dealing with your own individual policy that you could get through a licensed broker like myself. So the fifth and final one, which again most consumers are unaware of when purchasing loan insurance, is that when you're dealing with credit insurance and you have a mortgage to protect, if let's say there's numerous people within the dwelling that's responsible for the upkeep and the run of the home, but only one of them qualifies for the loan, if you're dealing with creditor insurance, it's the person who's on the loan that can be covered for the insurance. So let's say in a husband and wife setting, the wife qualifies for the mortgage and for the loan, but the husband, because of various reasons, doesn't. So she can be covered through the loan, but the husband won't be able to be. So the husband won't be able to be covered on the loan. When you have an individual plan, because it's not tied to the mortgage or to the loan, you can actually have both people on the loan. Because you can imagine a scenario, just because one person isn't on the loan doesn't mean there isn't going to be challenges financially if something happens to one of the two people in the house.
Right. Well, thank you very much, Thomas, for this information. You opened my eyes to many things. And remember, real estate is all about you. Thank you.
Thank you.